Welcome everyone to Unit A of the AAA module. I'm Mary, one of your AAA module leaders. This is a short video to give you an overview of what's covered in Unit 8. Unit 8 discusses engagements where the auditor uses the work of others in performing the audit. The unit covers the following key topics: group engagements, internal audit, and using the work of an expert. Let's start with group engagements. ISA 600 applies when an auditor is providing an opinion on a group financial report, such as the consolidated financial statements of a parent entity. The standard provides guidance to both the group engagement team, typically referred to as the group auditor, and the component auditor or auditors. This diagram provides a simple example of the role of each in a group engagement. The parent entity prepares a consolidated financial statement, or group financial report, which is audited by the group auditor. Note that in practice, the group auditor generally audits the parent entity, which is also a component of the group, and may also perform the work over some other components of the group where appropriate. The financial information of Subsidiary A and Subsidiary B is included in the consolidated financial statements of the parent entity. Subsidiary A is audited by Component Auditor 1, and Subsidiary B is audited by Component Auditor 2. Let's look at this in more detail by working through the following flowchart, which summarises the various activities performed by the group auditor and the component auditors in a group audit engagement. Firstly, the group engagement partner is responsible for the group engagement as a whole. The group auditor identifies and assesses the risks of material misstatement across the entire group. This requires obtaining an understanding of the group-wide controls and the consolidation process. The group auditor develops the audit strategy and audit plan for the entire group based on the assessed risks of material misstatement at the group level. The factors and judgments in setting materiality for a group audit are similar to those discussed in Unit 5. This table sets out the different materiality levels in the group audit. Note that overall materiality, component materiality, and the clearly trivial threshold are all set by the group auditor. In planning the group engagement, the group auditor also determines the scope of work. This is an example of a group scoping memorandum used for ShipMe, which is in the CSG. Scoping decisions involve decisions on which components to scope in and the extent of work to be performed. In scoping the work, components are classified as significant or non-significant. In summary, a component is considered to be significant if it is of individual financial significance to the group, or likely to include significant risks of material misstatement for the group due to its specific nature or circumstances. A component that is significant due to its individual financial significance to the group must be audited. When a component is significant due to significant risk, this work could involve an audit of the component, an audit of specified account balances, class of transactions or disclosures, or specified audit procedures relating to significant risks of material misstatement of the consolidated financial statements. In this example, specified audit procedures have been selected as the scope of work to be performed. The component auditors can be from the same audit firm as the group auditor or from a different audit firm. The group auditor must gain an understanding of the component auditors and must be satisfied that the component auditors are independent, competent, and comply with ethical requirements. The group auditor must communicate its requirements to the component auditor on a timely basis. The letter of instruction, typically referred to as the group audit instructions, must set out the work to be performed and the form and content of the component auditor's communication with the group auditor. In practice, component auditors perform the work requested and communicate their findings at specified points in time over the course of the group audit. The findings reported to the group auditor by the component auditors summarise the results of the work performed, including whether the component auditor has complied with the requirements of the group audit, whether the component audit has complied with the ethical requirements that are relevant to the group audit, the identification of the financial information on which the component auditor is reporting, instances of non-compliance with laws and regulations that could give rise to a material misstatement in the consolidated financial statements, a list of uncorrected misstatements of the relevant component, indicators of possible management bias, the identification and description of significant deficiencies in internal controls, other significant matters including fraud or suspected fraud, and the component auditor's overall findings and conclusions or opinions. Typically, the detailed working papers documenting the results of the work performed on the component are retained in the component auditor's auditor file and are not provided to the group auditor unless specifically requested. The group auditor is responsible for auditing the consolidation process. The first part of the group auditor's work on the consolidation includes checking that the consolidation schedule has been appropriately prepared by group management, including all the components, and that all routine consolidation adjustments have been made. The group auditor also checks that the information to be consolidated agrees with the information provided by various component auditors. The second part addresses more complex matters. For example, where a component has been acquired, the group financial statements would usually record goodwill and other intangible assets in relation to the component. In the year of acquisition, a valuation exercise should have been undertaken, and in subsequent years, ensuring any impairment issues are appropriately addressed. The group auditor reviews the findings reported by the component auditors and evaluates whether sufficient appropriate audit evidence on the consolidation process and the parent entity have been obtained. All of this is necessary for the group engagement partner to form an opinion. The group auditor is also required to communicate any identified deficiencies in internal control and fraud at a group level, and where necessary those identified by component auditors, to those charged with governance and group management. Before we finish up on the topic of group engagements, it's important to note that sometimes a component auditor also needs to perform an audit of a component for local statutory requirements. In this case, it is likely that the component auditor will set a different figure for overall materiality and performance materiality for statutory audit purposes, and perform the work accordingly to express an opinion for that component. Let's now move to the next key topic in Unit 8, which is internal audit. Many large companies have internal audit departments that have been established to monitor the effectiveness of internal control. The scope of internal audit activities could include the following: monitoring of internal control, risk assessment process, corporate governance, review of operating activities, and review of compliance with laws and regulations, just to name a few. Some of the work performed by internal audit may be relevant to an entity's external auditor. This may mean that the external auditor could modify the nature and timing of their own audit procedures, or reduce the extent of the audit procedures that they plan to perform for the external audit when deciding whether to rely on the work of internal audit. Remember, even when using the work of internal audit, the external auditor remains solely responsible for the audit opinion that is expressed in the auditor's report on the financial statements. ISO 610 Revised outlines when it is permissible to utilise the work of internal auditors, and if so, to what extent. Before performing a specific review of internal audit's work, the external auditor needs to determine whether the work of internal audit can be used. The external auditor will need to evaluate whether internal audit is objective, technically competent and adequately resourced, and systematic and disciplined in their approach, including quality control policies and procedures. The auditor should not use the work of internal audit if there are any concerns about any of these factors. This diagram summarises the key requirements of ISO 610 Revised. So after assessing internal audit, the external auditor assesses the nature and scope of the work performed by internal audit and considers whether that work would provide the evidence that is required by the external auditor. This will impact the nature, timing, and extent of audit procedures for the external audit. Specific procedures will then be required to be undertaken by the external auditor, which include reading the reports prepared by internal audit to confirm the external auditor's understanding of the work performed by internal audit and to review its findings, evaluating whether the work of internal audit was properly planned, performed, supervised, reviewed, and documented, and that sufficient evidence was obtained and the conclusions drawn were appropriate, and reperforming some of the testing work carried out by internal audit. This could involve reperforming some of the same sample items selected by internal audit, or selecting a smaller sample of similar items and reperforming the same procedures. All of this work will need to be documented appropriately. The final key topic in Unit 8 is using the work of an expert. There has been an increase in the use and importance of specialists and experts by management and by audit teams due to the increasing complexity of business transactions reported in the company's financial statements. The use of specialists and/or experts does not change management's responsibility for the preparation of the financial statements and the auditor's responsibility for the audit opinion expressed on those financial statements. It's important to understand the difference between specialists and experts as different auditing standards apply to each. This matrix provides some examples of each type. Note the differences applied depending on whether the work is used by the auditor or management. There are a number of steps that an auditor must take before they can rely on the work of an expert. This diagram summarises the key requirements of ISA 620 and illustrates how using the work of an expert is considered throughout the audit process. When the auditor decides to engage an expert, the auditor prepares a planning memorandum to agree on the terms of the engagement, including the scope of work as well as the reporting format of the findings and conclusions required from the expert. When the auditor receives the expert's report, the auditor considers the following factors when evaluating whether that work provides the auditor with sufficient appropriate evidence: the expert's findings and whether they are consistent with other audit evidence, the methods and assumptions used, and the source data used and whether it is accurate. If sufficient appropriate audit evidence was not obtained, the auditor's report would be modified. Note that the auditor does not make reference to the work of an expert in the auditor's report unless the auditor's report has been modified or required to by law and regulation. This sums up our overview of Unit 8. If you have any further questions regarding Unit 8, please post them on the discussion board. Thank you for watching this video. Look out for other overview videos for other units in the AAA module. We wish you all the very best in your studies.